Welcome back. You tune in to Market Technique, where we are taking you through how to play this market. And for that, we are now joined by Trideep Bhattacharya, President and CIO, Equities, Edelweiss AMC, is joining us to weigh in on the markets. Hi, Mr. Bhattacharya. Thank you so much for taking the time out and joining us. Mr. Bhattacharya, firstly, the way the macroeconomics is shaping up, if you look at the global headwinds that we see, whether it is in terms of the geopolitical tensions, the rising crude, how do you see India vis-a-vis the rest of the world right now? Because as far as India is concerned, we have seen, considerably the good part has been priced in. Do you see in the near term that some bit of a consolidation might happen? And going forward, how do you see the Indian markets to now play out?
Sure. Thanks for having me on your show. I would say that two or three parts to answer your question. I think, first of all, why amidst global volatility, overall, when you look at the maximum amount of volatility or uncertainty when it was the beginning of the year, when we didn't know how India is going to spend, what Trump's plans would have been, and also earnings were weak. So from that perspective, at the moment, the macros are a little less volatile than where they were. And the market rise seemed to sort of, factor that in. But as you rightly pointed out, the markets have rallied, go close to September 24 highs. And one of our hypotheses on the markets is that earnings-wise, we would probably see earnings come back in the second half of fiscal year 26. So over the next few months, markets being very close to September 24 highs, we would expect a bit of time correction in the markets to sort of happen, given that markets are in and around fair value. With regards to India, on a relative basis, we particularly score quite well relative to other emerging market nations and also globally, because A, our growth is the strongest, and B, the contexture or the texture of the growth is more domestic dependent than exports dependent. In circumstances where almost all the global economies are looking to find, make in their own country version of whatever goods and services they can and put tariffs on others. This particular growth metric, where growth is driven by domestic earnings, scores quite well, and hence relatively we would continue to be favorites of FIIs over a period of time, like we have seen since the beginning of this year.
Right. Hi, Trideep. Afternoon. This is Shrishti also joining in. But in terms of your sector preferences, Trideep, I believe that oil and gas is one such space where you're not very bullish on in terms of your allocations as well. But Trideep, oil is the biggest talking point right now with respect to what's really been happening with Iran as Israel. Give us some sense that back home, in terms of the stock preferences, how do you see the space evolving? Yes, oil is giving jitters in the short term. How do you see the movement in the oil impacting the various sectors? And along with that, within the oil and gas space, yes, there are sub-segments as well. So are you bullish on any particular theme, if at all?
Sure. So, at the end of the day, if you look at from the beginning of this year till now, US dollar has, crude oil has come down from $85 to hit a bottom of 65, and now we are hovering between 70 and there are 7 thereabouts. So net so far, oil has corrected, and which is positive for India economy on a net basis. Yes, recently we have seen a bit of a spike, but I would call that rise as being more in the range of 65 to 75 is where I would expect to remain. On the outside, if it touches or if it crosses $90 per barrel, then I would be worried. But my belief is the chances of that happening are fairly limited, given that there would be shale gas and also OPEC production coming to rescue. So that's the first a bit on oil. Second, I think obviously we are a big importer of oil, we as an economy, and hence in that context, oil prices going up can cause a little volatility. But as long as it's within the range of 65 to 75, we don't see as too much of a concern from a fundamental standpoint. Third, in the context of where we are placed within oil, we're clearly more positive upstream over the last couple of months since the oil price has corrected quite meaningfully to $65. And that has helped us during this period of oil price rise. But net, if I were to look at as compared to other sectors, we would bet on that part of the economy which uses oil as an input and churns our output, because quite a few of the incentives being doled out either by the macro conditions or by the government act in their favor, like consumption. So we would be betting on the other side, though. But within oil, we would rely on oil and gas as a sector. We would rely on stock selection to carry us through.
Trideep, so that's about the oil and gas part, but talk to us about the other pockets where you see value. I mean, I can see, the common consensus is, of course, in the favor of the financial, especially the NBFC space. And as I can see, you're positive on NBFCs as well. But besides that, talk to us about the sectors where you see value.
Sure. So I think if I were to look at one or two or three things which have happened in the context of India, which are genuinely positive and play out over the back half of this year, one is basically a resumption of consumption-based recovery. And there, certainly, we do see pockets where a rebound is imminent. So, very clearly, one is the crude oil, and we discussed at length as to the implications of the same. But secondly, inflation, as you were talking earlier in the show, have come off quite meaningfully by 100 basis points and more. That certainly is a boost for the rural economy. Also, monsoons being 6% higher than long period average also will act as a boom for the rural consumption. Finally, in a budget, what we saw from Honorable Finance Minister was effectively a salary hike of 5 to 7%, which will also play out come the festive season and onwards. So net, if you look at all the catalysts that are lined up in front of us, I would say the consumption as a sector would see quite a few things going for them as we kind of go towards the second half of fiscal year 26. The second theme that we like in the context of current times is resumption of government spending. Almost 1.5 years we spent where hardly any economic decision making really happened. But since the beginning of this year, we've seen meaningful amount of contracts being signed and more likely to come through in the areas of infrastructure, defense, railways, and the likes of it, which I think will play out in the form of earnings as we start from second half of fiscal year 26 onwards. So these are the two themes which I think would carry on the earnings battle, if you ask me, in the back half of fiscal year 26, which is what we are positive on. Those would be the sectors that we are good to go. The third area that I would say is IT services. That's more tactical in nature, more because expectations are very reasonable at the moment. While earnings will be a little bit languishing, but from a year from now, I think earnings outlook will actually look to start better, will start to look better, and also macro conditions will ease out. So these three are the areas that I would say we are betting on in our portfolios.
Take a note of all of those sectors, Trideep. But other than that, Trideep, apart from earnings, the other biggest talking point is what will happen to the trade talks and where is India placed with respect to the negotiations that are already underway. Give us some sense as we approach to the deadline. Is it a time to once again look out for rather some of those globally linked sectors, be it pharma, be it chemical, be it some of the other sectors where India has good exposure? IT is one such case, but we did talk about that in length. So help us understand that any globally linked sectors you believe where the sell-off has already trickled in now is ready to move on?
Sure. So I think IT services and chemicals would be two such pockets where from a near-term perspective, we would be relatively more positive, assuming a deal gets done. Now, in all honesty, in what shape and form deal will get done is an unknowable. But what we know is that business conditions tend to take precedence, particularly in an economy like that of US, and we would probably have the first contours of a deal as we head towards the first deadline, which is July 1st week. And assuming that happens, the two sectors that we like would probably kind of do better than others on a relative basis. But I would also like to point out the other side, which of course is a low probability event. But in case the tariff situation is kind of really the area where US kind of wants to plod on, and it actually implements high tariffs for the rest of the globe, then I think the biggest impact would be negatively on United States. And globally, we would be staring at fairly dire conditions from an economic growth standpoint towards the second half of this year. However, that is a three sigma event. That is a risk which I don't think at the moment markets are factoring in. And at the same time, it's a low probability event. And hopefully better sense prevails in the first week of July. And that's what we are hoping for. But we are bracing up for some sort of volatility in and around that date to see this through.
Right, Trideep, thank you so much for taking the time out and joining us and weighing in on the market. We will let you go on that note. But
Thank you.
Moving on